Good morning, everyone. My name is Van, and welcome to our details walkthrough the full cost methods. Over the next hours, we are going to demystify the process of how a company can determine the true cost of its product by properly allocating all its expenses. So, what is the full cost method? At its heart, it's a technique for finding total cost of product. To do this, we must understand the fundamental difference between two types of cost. First, we have a direct cost. These are the easy one. They can be directly and obviously traced to a specific product. For example, the laser used to make one specific handbag is a direct cost. But then we have the indirect cost. These are expenses that support the entire production process but can be tied to a single item of cost. Think of the factory electricity bill or the salary of the plant manager. The same challenge here, and what we will be focusing on this video is how to allocate this indirect cost fairly across all the products we make. This presentation will be a practical guide. By the end, you will understand the three critical steps for allocating these indirect costs. Primary allocation, where we assign costs to department. Secondary allocation, where we move costs from support department to the main department. And finally, how to calculate the cost rate using what we call cost driver to find the true cost of a product. And of course, we learn how to interpret and use this final rate to find the true cost of product. So to make this real, we use a case study throughout. A company make two types of laser bags, a small model and a larger model. Their process involves purchasing the material, cutting, sewing, and finally assembly. Their goal is very simple. They need to know the full cost of each bag to price them correctly and ensure they are profitable. To manage costs, our companies are organized into departments, which we call the cost center. We have one auxiliaries or support center, equipment management, which maintains the machinery, and we have five operational main center that are directly involved in the product, so the life cycle, procurement, cutting, sewing, assembly, and distribution. Okay, let's get into the process itself. We locate our indirect cost in three logical steps. First, primary allocation to distribute cost into all centers. Second, secondary allocation to move support costs into the main centers. And third, calculating the final rate to apply to products. Let's begin with step 1, primary allocation. The goal here is to take our general indirect costs and distribute them among our different cost centers. Right? To do this, we will but before we need to do that, we have to know that we have discussed in the at the beginning for the difference between the direct and indirect cost, and why it is important to allocate the indirect cost to the addition process of the product. So that's the reason why we need the allocation direct cost table. So what is allocation is a cost center? We have to know that there's a two kind of main is the main center and auxiliary center. Now we have another definition, allocation keys. An allocation key is simple the rule or logic we use to divide a cost. For instance, we might allocate the electricity bill based on the square footage or square meter of each department occupies. It's all about finding a fair and logical way to split the bill. For case study, the company have a grand total of 100,000 euro in indirect cost to allocate for the period. This cost including things like external services, personal costs, taxes, and so on. So here in this table, you can see the how to say the allocation key for each of the center. They are in percentages, right? So we use this percentage to allocate and to distribute the cost. And here we here as allocation the percentage. We use this. For example, look at the personal cost. As the row, we can see that 10% is allocated for equipment management, 35% for cutting, and 35% for sewing, and 5% for assembly, and only 10% for distribution. We repeat, we will use multiple the total cost with the percentage, and we have an amount of the cost distributed by each cost center. We repeat this calculation for every single cost category. When we are done, we have a complete table of showing how much of each cost has been assigned to each apartment. The final part of the step 1 is to sum the columns. It means that now we see the total direct cost for each center after the primary allocation. For example, the equipment management center has accumulated 29,900. Notice that the grand total is still 120,000. We haven't created a lost money, just move it around. So you can see this from here. However, but we think maybe we have a problem. The cost in the main center, like cutting and sewing, related to product. But what about the 29,000 in equipment management center? It is a support center, so we can't directly assign its code to a production of a back laser. So this is where step 2 comes in. Step 2 is secondary allocation. Welcome to the step 2, secondary allocation. The goal here is very simple. We need to empty the auxiliary center by transferring their total cost into a main center they support. After this step, all support center must be a balance of zero cost. In our example, we need to relocate the 29,900 from equipment management. We use a new set of allocation key for this. For instance, the procurement center, which rely heavily on well-maintained system, will receive the 40% of this cost. The calculation is very straightforward. Procurement get 40% of 29,900, which is an additional of 11,960. Distribution get 30%, which is 8,970, and so on. This is the result. As you can see, equipment management is now zero out. It's the 29,900 has been successfully moved to the five main centers. The total cost of procurement is now 20,460, cutting is 33,990, and so on. So the ground total remains 100,020. Now all our direct costs are sitting in department that actually work on product. We are ready for the final step. So after this calculation, this brings us to step 3, calculating cost ratio. We need a way to apply this department cost to actual products. To do this, we use the cost driver. A cost driver is simply a measure of activity. It can be a physical unit like machine hours or the number of pieces used produced, or it can be a monetary value called a cost base, like a total value of purchase. The key is to choose is a very the reason why we choose the cost driver is that the driver that has a strong correlation with the with the cost center, right? With the cost center. The formula is very simple. The total in order to calculate the cost base, we use the total cost in the driver center divided by the total activity of driver. Here is our formula for calculating the rest. The cost per drive unit equal to total cost in the center divided the total number of driver units. The cost rate for cost base in monetary measure, total cost in the center divided by total amount of the cost base. So all of this result give you a cost like a percentage or ratio or euro per hour or euro per EPS for the physical measure. So now here is our starting point for the rate calculation. Our job now is to fill the last two rows to calculate the cost driver or the cost base in each perfect center, and we calculate the number of units or the number of cost driver units, and we calculate the cost of units driver or rate. Let's calculate the rate for each center. First, procurement, which a total cost of 20,460. The best driver, here is the total value of raw material purchased, right? So the total value of I think that is the logic, because the more money that we spend on purchasing, the more activity occur in the procurement center. So we have total value of laser is 10,000, 6,000 PS multiplied by 25,000. And we have the total value of stress is 10,000 met multiplied by the cost, and the supply value by total quantity. And finally, we have a total cost base is 1,152,450 euro. So you can see that this mean, so what does it mean when we have this calculation? So now we calculate the rate. The rate means that the total cost divided by the total amount of cost base. So we have a procurement rate is 0.134. This means for every single $1 of material purchase, an additional 0.134 euro of indirect procurement cost is incurred. Next, for the cutting department, we also look at the production cost, the production and the material consumption. For this apartment, we have to care the number of lasers piece that were cut, right? Because in this department they mentioned that the how many how to say the material consumed, right? So we calculate the total number of laser piece that was cut. So we have a small bag, one piece of laser for one bag, and for larger bag we have a two piece of paper of laser for one bag. So we have a total driver units in this cutting center is 5,400 piece of laser for the cut. And now we use the formula of total cost divided by total number of driver units. It means that for the cutting driver cost as the cutting center is 6.294 per piece cut. We do the same now for the sewing center with the cost of 33,990. The workshop is a highly automated, so the bag driver is machine hours. The machine run for total of 680 hours during the period. So the rate is 33,990 divided by 680, which equal 49 point nearly 50 euro per machine hour. We move to the assembly, which cost of 12,890. The activity is driven by total number of bag finish, right? So I think that the logic is the more bag we assemble and finish, the more activity occur in this center. So the companies produce 1,000 small and 2,200 large bags for total of 3,200 products. The rate here is for the total cost divided by number of products. So we have a supply indirect cost rate is 4 euro per product. Finally, distribution with a cost of 18,670 euro. Here's the cost like marketing and shipping, the scale with the sales revenue. The chosen driver is 100 euro of sales revenue of stock, excluding tax, right? This is a logic because the activity like marketing and shipping tend to scale with the sales revenue. First, we have to calculate how many bags was sold. So we have 3,000 units. A bag was sold at each price of the small and large differently. So now we calculate the total sales revenue of the small, of the large, and we have a total revenue of 300,000 euro. Next, we calculate the number of 100 euro slice in that revenue. So we have a total cost base of 300,000 euro divided by 100. So we have a 300,000 units of cost base in this, center. The rate is 18,670 divided by 3,000 units. So we have a distribution cost driver rate is 6.22 euro per 100 euro of revenue. And here we have it. This table summarizes the final result of our work. We have a successful converted lump sum of indirect cost into precise usable rate for each stage of business life cycle. So for example, here the first row element center, the total cost, the cost driver, the number of units, amount, and the cost per unit rate here, right? So what we do this number actually mean they are incredibly powerful tool for decision making. We know that every hour our sewing machine run cost us nearly 50 euro in indirect expense. We know for every single bag we make, big or small, carry an direct assembly cost of 4.03 euro, and for every single 100 in sales we generate, we spend 6.22 on distribution cost. This kind of data that allows a business to truly understand its own cost structure. Now we can finally calculate the indirect cost of a specific product. For a large product which require 2 pairs of laser to be cut, the indirect cutting cost is 2 times our rate of 6.29 PS, right? So it equals 12.95 euro. The sampling cost is one product multiplied by 4.30 cents. When we add up these index records from every center and combine them with direct cost of labor and thread, we finally arrive at the full cost of products. Now I just want to share with you another topic, but we not focus on to this accurately. A company must maintain a perpetual inventory system using methods like first in, first out, or weighted average cost to check the value of materials that they use. So you can see that in our program we focus on weighted average cost on a good available for sale during the period. Right? Now the final diagram show how the entire flow we discussed today, from purchasing raw materials to the production workshop, and finally to the cost of goods sold. The full cost method provides a framework for tracking and allocating costs at every single stage of this journey, giving us clarity and control over our finance. So this is a very cost analysis symbol of a commercial enterprise that they purchase the material and they have a cost of merchandise service, and after that they add on the cost distribution. So we have a cost of goods sold of merchandise sold. And the next is the diagram of an industrial company production process. We'll use this diagram in our next presentation about the full cost method exercise. So I invite you to look at this and we discuss in the next one. So our presentation now is at the end. Just conclude our detailed walkthrough of the full cost method. We journey from a pool of 120,000 in general cost on the way down to specific cost per machine hour um, and per product. By following this three-step process, any company can gain a much deeper understanding of its profitability. Thank you for your time and attention. I would now be happy to answer any questions you may have, and see you in the next video. Thank you.